As you're watching this video, there are 54 million Americans who believe they're making smart investment decisions. They check their portfolios daily, follow market trends, and feel confident about their financial future. But what if I told you that 95% of them are actually chained in a cave, mistaking shadows for reality? 2,400 years ago, the philosopher Plato told a story that perfectly explains why most investors will never achieve true financial freedom. And by the end of this video, you'll understand not just why your current investment strategy might be keeping you trapped, but how to break free and see the financial world as it really is. I'm from Vine Wallet, where we believe the greatest philosophers had more to teach us about money than any Wall Street guru ever will. And if you've ever felt confused by conflicting investment advice, overwhelmed by market volatility, or wondered if there's a better way to build wealth that aligns with your values, you're going to want to subscribe and hit that notification bell, because this might be the most important few minutes you spend this year. Let me tell you Plato's story, but with a modern twist. Picture this. Imagine you and thousands of others are chained in a vast underground cave. You've been there your entire adult life. Behind you, there's a fire burning. And between you and that fire, there are people carrying objects, casting shadows on the wall in front of you. But here's the thing, you can't turn around. All you can see are these shadows on the wall. And because that's all you've ever seen, you think those shadows are reality. You give them names. You track their patterns. You even compete with your fellow prisoners to predict which shadow will appear next. Now let me ask you something. Does this sound familiar? Every day, millions of investors sit chained to their screens, watching the shadows of the financial world dance before them. Stock prices going up and down, market caps, P over E ratios, quarterly earnings reports. They think they're seeing reality. They think they understand what drives these numbers. But just like the prisoners in Plato's cave, they're only seeing shadows because they can't see what's really casting those shadows. So what are these shadows in the investment world? Let me show you exactly what most investors mistake for reality. Shadow number 1, stock price performance. Most investors think a rising stock price means a good investment, but that's just a shadow. The real fire casting that shadow, it could be anything. Market manipulation, speculation bubbles, or even companies that are literally destroying the planet for short-term profits. In the 1980s, tobacco stocks were absolute darlings. Philip Morris returned over 20% annually for decades. Investors watching that shadow thought they were making brilliant decisions, but they couldn't see the fire behind it, an industry built on addiction and death. Shadow number 2, market cap and blue chip status. People invest in the biggest companies thinking bigger equals safer, but size is just another shadow. Wells Fargo was a blue chip stock right up until the fake account scandal. Enron was the 7th largest company in America before it collapsed overnight. And here's where it gets really interesting for our story. Shadow number 3, traditional financial metrics. Investors analyze debt-to-equity ratios, return on assets, profit margins, all the traditional metrics they learned in business school. But these are just shadows too. They don't show you what's really happening behind the scenes. A company can have perfect financials today while building massive long-term liabilities that don't show up on any balance sheet. Climate change, social unrest, regulatory crackdowns, resource depletion. The coal industry had strong fundamentals right up until the moment it didn't. And here's what's really crazy. Pause this video for a second and think about your own portfolio. How much of your investment decisions are based on these shadows? Stock performance, company size, traditional metrics. If you're being honest, it's probably most of them, right? Don't worry. That's exactly where Plato's prisoners were too, until one of them broke free. In Plato's story, one prisoner breaks free from his chains and turns around. For the first time in his life, he sees the fire. He sees the people carrying objects. He realizes everything he thought was real was just shadows on a wall. This is the moment of awakening. In the investment world, this is when you stop looking at just stock prices and start seeing what actually drives long-term value. So what's the fire that's been casting all these investment shadows? It's the fundamental systems that make our economy possible: environmental stability, social cooperation, functional governance, sustainable resource use, employee well-being, innovation that solves real problems. This is what ESG investing really means: environmental, social, and governance factors. Not because it's nice to have or politically correct, but because these are the real fires that cast the shadows you see on your portfolio screen. Let me give you a perfect example. In 2010, most investors looking at Tesla saw a tiny car company burning cash with an eccentric CEO. The shadows on the wall, traditional metrics, said avoid at all costs. But if you could see the fire behind those shadows, the shift towards sustainable transportation, the innovation in battery technology, the growing demand for clean energy, you saw a completely different reality. Tesla returned over 1,500% in the next decade, while traditional automakers struggled. This pattern repeats everywhere once you know what to look for. Companies aligned with fundamental long-term trends, sustainability, social responsibility, good governance consistently outperform those chasing short-term shadows. And this isn't just my opinion. Harvard Business School analyzed 180 companies over 18 years and found that firms with strong sustainability practices outperformed their peers by 4.8% annually. Deutsche Bank reviewed over 2,000 studies and found that 90% showed a positive correlation between ESG factors and financial performance. But here's where Plato's story gets really interesting and where most people get stuck. In Plato's allegory, when the escaped prisoner returns to tell the others about reality, they don't believe him. They think he's crazy. They prefer their familiar shadows to the uncomfortable truth. Sound familiar? How many times have you heard someone say, ESG investing means sacrificing returns? Or, sustainable investing is just virtue signaling. They're not being stubborn. They're just still chained to the wall, watching shadows. So let me show you exactly how to break free from your own investment cave. This is what I call the Vine Wallet Reality Method. Step 1. Shadow recognition. Look at your current portfolio. For each holding, ask yourself, am I invested in this because of shadows, stock performance, brand recognition, traditional metrics, or because I understand the fundamental fires driving this business? Step 2. Fire identification. Before investing in any company, investigate the fires. How do they treat employees? What's their environmental impact? How do they govern themselves? Are they solving real problems or creating them? Step 3. Future-proofing. Ask yourself, will this company thrive in a world with carbon pricing, resource scarcity, and increased social consciousness, or will it be disrupted? Let me show you this in action with a real portfolio transformation. Here's Sarah, a 32-year-old marketing manager from Austin. Her shadow-based portfolio in 2019, heavy in oil stocks, fast fashion retailers, and traditional banks. Total return, 3.2% annually. After applying the Vine Wallet Reality Method, she shifted to companies with strong ESG fundamentals, renewable energy, sustainable consumer goods, purpose-driven technology companies. Her reality-based portfolio returned 11.7% annually over the same period while also aligning with her values. And Sarah isn't unique. Our community members consistently report better returns and better sleep at night once they start investing in reality instead of shadows. Here's my challenge to you. Pick one company in your current portfolio, just one, and do a reality check this week. Look beyond the shadows of stock price and financial metrics. Research how they treat their employees. Investigate their environmental impact. Understand their governance structure. Then ask yourself, does this company align with the world I want to invest in? Share your findings in the comments. I read every single one, and I'll personally respond to help you see past the shadows. Remember, you don't need to transform your entire portfolio overnight. The prisoner in Plato's cave didn't sprint to freedom. He took it step by step, adjusting to each new level of reality. Your investment journey can work the same way. Start with awareness. Recognize the shadows for what they are. Then, one investment at a time, start choosing companies that represent the fires of real, sustainable value creation. Because here's the truth that Wall Street doesn't want you to know. When you invest in reality instead of shadows, you're not just building wealth, you're building a better world. And that's the ultimate return on investment. If this resonated with you, make sure you're subscribed.